Sorry. Afternoon. Just trying to keep myself awake. Somebody get her a cough sweet. Constantly going through coughing fits. It's quite amusing, but she's not with it today, is she?
Essentially what you're saying.
Anywho, how are we all doing? What a yawn fest. Yeah, stuff's moving. Not massively, but it's moving. So we've got quite a lot of ADR movement today. Mainly the pound. Pound is the main move today. Some very decent moves on the pound. Euro's bullish as well. So Lagarde basically hammering home that the rate cuts are not on the table, basically. So interesting. Afternoon, Ian, Martin, Julio, Dion, Crom, Gregors, Kennelly, Virginia, It, Monkey, Paolo, Morning XO Update.news. Got slaughtered with that is move yesterday. That W is what? Got slaughtered. W that is move yesterday. Not stop. Afternoon, Evans. No stop. Okay. So yeah, so obviously we're flat on the news now. So we've done all the news. Lot of news. So the upshot of everything we've got so far now for interest rates and press conferences, etc., is FOMC dollar going to come down faster than expected because we have faster than expected inflation drop. Swiss, tight-lipped, no information whatsoever. No idea. Pound, not going to move interest rates down as quick as expected because we still think we need to do more with interest rate rises, apparently. So board members voting a little bit more for interest rate rises than drops. So bullish pound, euro bullish. Lagarde coming out and saying we're not even talking about interest rate cuts yet because inflation is expected to tick back up again. Although it has come down very fast, we're expecting an uptick. So not even talking about inflationary drops because domestic inflation isn't moving. So the upshot of all of this is basically bullish euro, bullish pound, bearish US, no idea Swiss. Swiss will just go with the euro, so bullish. So yeah, interesting. I was expecting a little bit more bearishness out of everybody over this last 48 hours, but haven't happened. So we are still going to drop interest rates next year. That's a given. Unless something dramatic happens, but the rate of drop is unlikely to be more than 1.25% to 1.5% maximum as it stands right now. So where you look at, we've taken 18 months to go from 0 to 5.25, for example, with a pound. Over the next 12 months, we are going to drop down to around about 4. ECB probably dropping to something like 3.5. US probably going down to about 4 as well, probably falling in line with a pound, but obviously the rate being faster. So interesting. It looks like, from what the euro said the other week, it was we better get our rates down fast. And today Lagarde's come out and said not happening. So back up pound, euro, all change again. In a nutshell, confusing as hell as usual. Anyway, so fair bit of movement across the board today. Euro undone all of the moves from yesterday. Euro odd there, for example. Euro CAD, lovely big rally on that one. Should have stayed in it. Had no idea. But yeah, big move up on Euro Swiss rallying up to 150, Euro Pound, bit of a whipsaw because obviously we've had the pound interest rates and then the Euro interest rates. So the pound rallied hard. Now the Euro's rallying harder than the pound. So just undone. Everything today is just completely undone itself. Euro New Zealand rallying. Euro US are off the top as well. Pound doing very, very well today. But, you know, these moves, Swiss obviously said nothing. Pound taking advantage. So, yeah, a lot of movement all over the place. But if you look at everything on the grand scheme of things, yeah, what have we done? Nothing. Not gone anywhere. So all of this news we've had this week, we've had a hell of a lot of movement out of it. We've gone, if you look, well, you can see on the weeklies, look. Yeah, we've had a hell of a lot of movement. Weekly ranges have all been hit. So we've done an awful lot of that, but we haven't really done anything like that, have we? So no news. A lot of volatility, but no news, really, no direction. So pound US dollar now back up to the highs of last month. I suspect we'll find ourselves back down here at some point tomorrow when we get all the PMI data released. So, you know, it's just non-directional, all of it. Look, it's just when you look at it, you zoom out and you actually look at what we're doing. We're not doing anything. This entire month is just a whitewash, which is good for mean reversion trading because it doesn't matter which way you went this month. You've got out of everything. You're flat, as I'm shown on my P&L. I'm flat. Everything's just gone up and down. That's it. So comebacks January. So difficult to really unpick this, but I suspect with the US dollar, we'll see continuation in the US dollar weakness. The euro and the pound kind of more sideways, slightly up, really. So I think the US and the CAD are going to start to weaken a little moving forward. But because we've got a strong pound and a strong euro-ish, it should be fairly orderly, the movement. So I still don't think there's anything that's got a massive advantage over anything else until we get that first interest rate move by someone, which it looks now like it's going to be the US. Last week it looked like it was going to be the euro. They're expecting that 2.4 to tick up on the next quarter. So until that first move happens, or we get some inkling of when, which is more likely going to be March, April, I think we're just doing the same stuff January, February, March. So we will see. Indices this morning, we got 1 minute to the open. A DAX was okay this morning, made about 400 out of that. Pretty good. Nice pullback into the propulsion gap from the gap fill we looked at. So we looked at the exit being somewhere around this area here, which got out nicely into that move, which is what we looked at this morning. Coming down hard now because obviously the euro's rallying off the back of Lagarde. NASDAQ, S&P and the Dow, pretty decent pre-market ranges. Market's open. So we haven't really gone very far today. So yeah, we'll see if we can get some trades on this afternoon. If this is a whippy one, I think I'll probably call it a day today. We'll see. Short on the NASDAQ. The Dow range is way too big. Look at that, 830, the pre-market range. So not getting involved in that one today. Well, not at the moment. Might take the 5 minute. Short NASDAQ. S&P thinking about what it wants to do. Fair bit of volatility coming in, which is good. So it means we've got some traders involved. Long on the S&P. Great. Let's start the day with a lovely hedge. I think I'm definitely going to call it a day. Got a feeling we might get a bit whippy today. We'll see. But yeah, interesting week this week. W on the U's move, US dollar move. Okay. Don't trade news. Evening outro. Afternoon Neo. Afternoon Brian. Nice Christmas. Father Christmas emoji. Pre-market FTSE would have been a blinder today. It was. There's people getting 10 Rs out of the FTSE today. FTSE was fast today. Really big move on the FTSE today. Absolutely screamed. That was the one to be on today, which is kind of why I want to introduce the FTSE into my morning session with the DAX, because if we can trade those alongside each other, it gives us something to hedge, doesn't it? So there was your pre-market. That was the opening candle. Didn't stop. So you had you basically had 2R hit within the first 5-minute open within the opening cash balance. 15 minutes later, you'd done 5R, and it went up to 7 to 10R today. Huge move on the FTSE. Lovely. Somebody somewhere knew what was going to go on today with the Bank of England announcement, I suspect. Afternoon, Peter. Gaps on the 5-minute chart, definitely drying up. Yeah, the volume is definitely low. Hedged on the NASDAQ. Might get on the 5-minute with the Dow. Afternoon, day trader effects. I might scrap the NAS in the new year. Trade the Dow and the S&P. Yeah, I mean, there's an argument for it's a tricky one. Like days like today, and I think yesterday as well, wasn't it? Because these move together, what you're really doing is doubling up. But this is a lot more violent and a lot more volatile, meaning that, like this morning or today, I'm hedged on the NASDAQ, and I've got a nice clean break on the S&P. So if I hadn't have traded this, that's a nice clean profit, isn't it? What I've now got to do is try and use this to pay for that, which cancels each other out. The days, though, where you get this fly on a clean break, this fly on a clean break along with it, you make so much more money. And at the open, quite often, and I've noticed it a lot more in the last couple of weeks, actually, one of these goes short and one of them goes long. And you have to wait for the other one to catch it. So you know you've got a hedge on, basically. And the danger is a double hedge, which is a double problem for the afternoon, isn't it? So I kind of get the scrapping one of them. But it's also very nice when they both break together, isn't it? So yeah, FTSE and DAX in the morning, and either this one and this one, or this one and this one in the afternoon, because these do move independently. The Dow moves independently of the NASDAQ and the S&P. So a lot slower. That it would make more sense to pair the Dow with the NASDAQ, because actually no, it doesn't matter, because the S&P is a lot slower than the NAS. So not that you think that at the moment. Not really doing a lot. Okay. That's too big. The range is too big on the S&P. On the Dow, look at that, 750. 5-minute opening cash balance is over 20% of the average daily range. The pre-market move was over 20% of the average daily range. So we've done 40% average daily range movement in 2 candles there. Too big. You're not going to be able to get a target on that. It's going to find it very difficult to get a decent move. However, if this breaks and it does start to roll, we've got such a long way to go. That's ADR today. So long way to go. To get back down there, you've got to do 200-300 ADR today. Not likely. Thanks for the follow, Libra. Welcome aboard. Let me just turn my volume down because that's really loud. So yeah, no trade on the Dow today. In danger of getting hedged on this. So looking at where we are with the US indices at the minute, the Dow obviously, and the chart updates. Think about it. looks like it's gapped up massively, doesn't it? It hasn't. Come on. Why are you not updating? We'll come back to that in a minute. Wait for it to figure its life out. So yeah, we look at on here, can't we? So obviously, as we know, we're out of a massive rally at the moment. This could well try and undo itself today, as the DAX has tried to do today. So if we do break short on the Dow, as you can see, there is very little. There's that high and that low. So literally we had that rally out of FOMC. We had one pullback and then we rallied again. We've gapped up, sat sideways. If it breaks short, something around there, you might find we get some support on the way down. But really, there's nothing to do. So we're either going to undo the FOMC move, meaning we have a US dollar rally today, or we're not. And we're just going to sit around. So difficult to call really a direction on any of this today. Dow is going short, which means I'm going to get hedged on both the S&P and the NASDAQ. I'm done. This is what I was worried about today, getting some just rotational day. After all this movement, we've had absolute massive news all week and no movement on anything. One FOMC move, which looks like it's going to undo itself. So I think I'm done for the year. I shall come back in January. This is just whippy as hell at the minute. Lucky to get out of the DAX this morning. I'm just going to find a lot of... the danger is this type of move is 300-400 ADR, because there's no liquidity in the market and the market wants to unwind and it just goes. It's all right if you're on it, but danger of getting slipped dramatically. So I think I might call it. I will deal with these hedges, but I want to get into my chart so I can see the levels. There we go. Right, so NASDAQ upside, there isn't any. So if we break to the upside today, we're kind of, actually, we're right up at that high, aren't we? Yeah, there we go. So we're basically this level here and that level there basically is exactly where we are. So this is your upside resistance all-time high, where we are at the moment. So it's struggling, obviously, to get through this level. We're likely to find a bounce point here, and that's ADR today as well, look. Just shy of ADR. So NASDAQ upside, we're looking at ADR basically today to the upside. If it breaks, so somewhere around 5R. So if we do go long, that's your target to the upside, and we're likely to find resistance triggering there. If we go to the downside, back in the propulsion gap from FOMC, I wouldn't want to take it anywhere else. We've done that gap fill basically. So if we break to the downside, we'll probably get a bounce down in this propulsion move somewhere around there. So I'm going to leave those two exactly as they are on the NASDAQ and see if we get a move. If we don't get a move and we just get a silly little rotation day, what it is. The S&P, S&P, we've got miles to go. It's about 300 ADR upside until we get to that all-time high there. So if that one obviously breaks to the upside, again, you're going to start looking somewhere up in ADR here for some kind of price action telling you to jump out. You can't really pick a level to the upside to target. Downside is all the way back down there, which is over 175 ADR. As I said, there's nothing much really that gives us any clues to the downside as where to go. It's just impossible trying to find targets on the S&P. There you go, hedged on it as well. So double loss today. The DAX cancels 2/3 of one of these out. So yeah, downside. That's ADR. So really target that and ADR to the upside. Nothing you can do with it. if you've got into the Dow short, you wouldn't have had an opportunity to get in long, because if you took the pre-market, you've triggered short. If you took the 5-minute ORB, you've also triggered short. So downside, you want to be watching this area here for any signs of support, which is 1 to 2, well, sort of 1 to 3R, which is also ADR. And if it breaks, look out below 175, 200 ADR. So very, 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 very difficult to get any indication as to where anything's going after a move like that. I'm annoyed with myself because 5 minutes before coming on, while I was watching a guard, I was like, this thing's all over the place. I'm going to go in half risk. And I decided not to. And I decided not to because I had the DAX profit from this morning, which means that I had a sort of $400 buffer I could play with. So that's kind of like a 97 or about $100 loss there. So it's a $600 day. If I can't get out of these hedges. So we'll just see what happens with it. But yeah, it's too whippy, isn't it? We've been hedged so many times this week. Or you will have been multi-stop outed if you've been trading with a stop loss this week. So it's over. It's Christmas. I'm flat everywhere on the FX, so I'll come back in January. Annoying, I keep getting a trade on the Dow. I keep not getting a trade on the Dow. Yeah, Dow didn't get a trade on the Dow yesterday either, did we? Don't think. Yeah, I got one on the Dow yesterday. Just about though, I think. Yeah. But I got out of that because we didn't go. Again, it's, I think it's, you just got to call it and go, this is not conducive to trading at the moment. Yeah. That was your break. And then we moved up and we sat there. Yeah. Because it was FOMC. Now it's after FOMC. It's not doing anything, is it? You think it's your broker? Why would your broker stop trades being taken? Unless you've got a margin issue. Check your margin. Obviously, if you've got in here and there's no margin left to take that one, that might be the problem. I don't know. Shouldn't be. I mean, it might be a leverage issue. Oh, if you're on Darwinex, yeah, God, you won't get 3 trades on. Depends what your risk is. If you had 0.5% risk on each of these, you wouldn't get them all on. There wouldn't be enough leverage. 0.25%, you should be all right, I would say. Leverage is a very, very difficult thing because you get different leverages on the indices. And it also depends on the size of the ranges. As obviously, if you get a tight range, your lot size is going to be higher. You're risking the same amount of money, but you take a bigger lot. So therefore, you use up more leverage. This is why I'm kind of looking for a US broker. I'm on Forex at the moment, but I want to trade the FTSE. But I'm looking for an overseas broker that's going to give me some margin leverage. That's got the FTSE. I find Lagarde way funnier than the J-Man. He's so robotic. Well, she was a robotic coughing fit this morning, wasn't she? This afternoon. She just kept coughing. It was quite funny. Oh, Lagarde. Did the man come out and do the... I missed the beginning. There's a man whose job it is to remove the barrier. And I always laugh at him. Here he comes. Look. The barrier man will come out now. You watch. He gets the like... remove the barriers, remove the barriers. Here he is. He's waiting. He's there. Look, he's waiting. The barrier man. You watch. You're like, excuse me, move along. What a job. That's his only job. He is the barrier man at the ECB press conference. It's his job. It's a very important job because you can't have the barrier in the shot, can you? Come on, I want to see the barrier man. There he comes. There he is. Look, he's just about to come on. This is his moment. Ready? This is his moment. Excuse me. Barrier man needs to do his job. Thank you. I've watched too many ECB press conferences. God. That's my entertainment for the day. Waiting for the barrier man to come. Euro US dollar 150 ADR. Okay, so now all the information is out in the market. Now the market can do its thing. So be aware. Do not get in front of any steam trains at the moment. This market will want to get flat as fast as possible this week so it can take next week off. So some of these moves now that we know what all the interest rate decisions are and what the forward guidance is, the market can now start moving. So some of these moves, just be very, very careful. Watch for support resistance. Yeah, you can. 200 ADR is not off the table. And, you know, these FOMC moves may not get retested. So just be a little careful today. My computer's just gone mental. Fans have all kicked in. Looks like the barrier man upset the computer. Euro CAD, ADR. I'm not going to go through all these today because there's not much point in looking at the ADRs today. Obviously, we knew we were going to get massive moves across the board off the back of the interest rates. And they look like they're all sort of starting to get underway. So we're just undoing basically previous moves. So if you want to mean revert these, obviously you can have a go at them, but just be careful because they could go easily, you know, 200 ADRs today. We're up at 175 on a couple of these pounds already. I'll just give it a miss because the market will move as far as it wants to move. If you're in some of the mean reversions from yesterday, the H1 RSI extensions that we looked at this morning and yesterday, you know, they're all playing out. So we are just upping and downing at the minute. She was a little under the weather. I know, she wasn't very well, was she? Morning from Tulsa, Oklahoma. Morning, Brian. What do you think? Barrier man gets paid? Not a lot. His only job. He only does it. Literally, it's once a month. He comes out and does that job. That's his job. He is the ECB barrier man. Like clockwork. He does it very, very well. And he dresses in a suit for the barrier man job as well. So he must be paid quite well because he can afford a suit. 150 Euro US. Here we go. So everything's starting to move. So be careful. Unpredictable at the moment. Anyone else short UJ and long gold? Euro CAD weekly range hit. Short UJ. Yeah, I would be short UJ. I'm not, but I would be. No idea about gold. You should be long gold at the moment because obviously the US dollar is weakening. So watch those propulsion gaps. Black ball markets have the FTSE. Yeah, there's a lot of XM Global have got the FTSE. I might give XM a go. I've signed up with the wrong account for them, so I'm going to try their other account that trades micros. So I might use XM. I want leverage. So Darwinix is out the window, really. I would use Darwinix because they've got tight spreads and they're a really good broker, but no leverage. FTSE, a full ADR reversal from highs. Let me open my XM platform. Just whippy on the indices. Look, red, green, red, green. going anywhere, is it? Undone the lot, look. Straight back down, undone the whole thing. A little bit like the DAX, look. So there's the FOMC move. Gap up, completely undone. Back to where we started. It's not going, and nothing's going anywhere, is it? Nothing, literally nothing's going anywhere. We're getting a lot of movement. We get a lot of slippage, low liquidity, but no direction. The market has got no idea where to go with any of this information that we're getting. It's a case of when are we going to remove these interest rates? We've been sitting on them now for 2 months, no movement. Unless you tell us which way the interest rates are going and when, we can't do anything because we're not going to buy anything at the moment because there's nothing worth buying. You're not going to sell anything, you know, so it's just going to flip, flop, flip, flop, flip, flop. Ranges all over the place. It's just really, really hard to kind of do anything. And they got these stupid moves going in on gold like that. But that kind of sums it up, doesn't it? The last 4 weeks, totally sideways. Good movement, but, you know, non-directional. Up, back down again. Back to where we started last month. Pound US 150 ADR. We're at the highs. So you've got another high coming up on this. It's miles away, actually. No, you haven't. There is another high there. There's a few kind of levels coming up which might be resistive, about 200 to 25 ADR. So we're at the highs now, look. So loving this pound, not liking the US dollar. So they are continuing this US dollar move by the looks of things. So I would be very wary about trying to mean revert anything US at the minute. All over the place, aren't we? So today with these indices, I'm just going to let these run basically. See if we can get a move on the cards. It's going to need to be an ADR move for me to actually get out of these today, because you can't, if it's going to run to the upside, you can't pick anywhere to get out. It wasn't like the DAX today where we had an obvious support resistance zone. We could get out and get the reversal on. If they break to the upside, the US indices, you're stuffed because you've got no resistance to look at that's obvious of you. Apart from the NASDAQ, you've got, we do know the NASDAQ's got an upside. So, but it's miles away. So you've got to wait for it to hit something that's worth reacting from. So I'm just going to let those two run to target. And if they don't get there, they will be closed as a loss today. And I will call it there because I'm not going to bother trading the PMIs tomorrow. I think we're going to get the same thing tomorrow off the PMIs. We're going to get all this PMI information coming out after the market. We've got everything happening tomorrow morning for the Eurozone, and then tomorrow afternoon after market. So the open tomorrow at 2:30 is going to sit there and wait for PMIs. So there's a high probability of getting whipped at the open in that first 15 minutes and hedged or stopped out multiple times. So probably the best thing to do tomorrow, if you want to trade, is to wait 15 minutes and trade the 15-minute range. So wait for that first 15 minutes and then trade that 15-minute breakout. So not the 5-minute ORB. That's the best thing to do there. Same with the euro tomorrow. You're likely to get whipped around on the DAX while we're waiting for that to come out. But the big one is the German. So the Germany make up the manufacturing and services PMI majority. So this is the one that moves the most tomorrow. So really that move will start at 8:30. That one you can ignore because this figure is an amalgamation of those two, which is why that's orange. We don't worry about the entire Eurozone. We worry about Germany and France because they're the big contributors. So those two, obviously, you're going to get movement on. The FTSE tomorrow might wait around an hour and a half. It might not, don't know. But I'm not going to bother trading tomorrow. There's no point. This week has been incredibly difficult to get basically a break even, which is what I'm coming out with for this week. So I just can't be bothered with it tomorrow. So it's going to be too tricky with the PMI figures. So I will call it a day for the year and come back in January. Time off. So the 3rd of January is basically when I'm back. If you look at the financial calendar for next week, we've got the Bank of Japan rate next week, which is I will be around next week, so I will be in Telegram and doing stuff in Telegram. So, but they have said that they're not going to increase their interest rate up to 0 December. They've said this many times and then done the opposite to what they say. So at the moment, what we should see is continued strength because they won't increase the interest rate. If they did increase the interest rate, it's going to go mental and everything is going to come down against the yen. If they don't increase it, it means that they're going to increase it in January, which means it's going to be strong. So either way, we should see yen strength next week. Couple that with very light liquidity, you can see some massive ADRs on the Japanese pairs. So shorts on the yen, scaling into shorts on the yen is probably the only thing that I would consider doing at the moment. You've got the inflation figure for the Canadian dollar coming up as well as the pound. Apart from that, that's pretty much it for next week. And then it's Christmas. So that week before Christmas is typically very difficult to trade. Lots of slippage, lots of big movements. You get lots of ADR hits quite often, but it's just movement up and down. A little bit like this week, really. Then obviously it's Christmas next week. And that entire week, there's nothing happening. So you got Christmas on the Monday this week, then Boxing Day. And then we've got the Wednesday and the Thursday, just nothing happening. A lot of markets shut. We got Monday is the 1st. So that's obviously a bank holiday. Tuesday is also a bank holiday in Japan and Switzerland. But Tuesday tends to be nothing. So the 3rd is when we're back. So that's the day that I will return. And we come straight back into non-farm payroll. So it's going to be an interesting return. So that's basically when I'll be back on the 3rd of January. I just wanted to see what the markets were going to do today. And that's kind of confirmed for me that we don't want to be involved at the minute. Look at it. Can't make money if the market ain't moving. All it does is cost. US 30 already hit all-time high. US 100 is the closest to all-time high. It might be the safest bet long, but it might also be the worst long you've ever made. What happens at resistance? Bounces. It's either going to break out or it's not. If it doesn't break out, it's going to come down like a house of cards. If it does break out, it might get a pop. So just be careful. NASDAQ's very, very close. I mean, your where's my drawing tools? God knows what color this is going to be. Red. So that's your high from February this year. But we're miles away from it, look. So you've got obviously the NASDAQ, which is much closer. NASDAQ is coming up to that high now, right now, today, within ADR. So this one basically, but 2 days before, basically the end of trading, I wouldn't be looking necessarily for a particularly strong move unless it's down. We are starting to drop now. DAX is dropping again. Look. We might be getting a little bit of a rally on the US side. Oh, look at this. US, no, it's coming down. Look. Swiss franc is rallying. Bit of strength coming in the Swissy, look. Not a lot, but... so, yeah, that's what I'm going to do. I'm not going to bother trading tomorrow, so I won't do live streams tomorrow. There's no point. Your PMI figures, obviously, you need to concentrate on tomorrow, but they are going to really screw with the market tomorrow. So your opens are going to be very, very hard because you've got news coming literally straight after the opens. So you're not going to get very clean breaks. I wouldn't imagine tomorrow. It'd be very similar to what you've just seen happening on the US indices today. We're going to sit around for 10 or 15 minutes waiting for that. So no point really in getting involved tomorrow. Yeah, up to you if you want to trade next week. But if you are going to trade next week, if you're in positions, obviously, you've got to trade those positions out. So just look for opportunities at support and resistance, but I wouldn't bother with indices. Gold pumping. Yeah, US dollar dropping again. I just said, you know, that US dollar looks like it's coming down. The Swiss franc's rallying a little bit as well. So gold will be pushing up on a US dollar drop. Got this propulsion gap there out of that accumulation, which you might find resistive. We're out of that high now, look. So that propulsion gap that we put in there after that ridiculous, what was that, 600 ADR or something stupid? Some nutty move that the cleaner pushed the buy button on, and then the banker came in and undid it. That move there where we just basically kept adding and adding and adding and adding into it, that has now broken. So your next stop to the upside basically is going to be where we added to that sell, which is ADR today. So watch ADR today. But if that US dollar is going to continue to weaken, I'm not sure we're going to come and retest this level. Could just go, couldn't it, from here? So we'll find out. But when you come back in January, it's always very difficult coming back in January because there's very difficult readjustment period. I always find there's a very difficult readjustment period because you can't you lose your kind of flow as to what's been happening. Everybody does because you haven't been watching the charts for 2 weeks. You just basically have to readjust. So in January, what I usually do is spend the first week figuring out what the hell is going on and sort of start to get in a bit cautiously. So with the indices, it doesn't really make any difference. The indices are just going to go as normal anyway. But with FX, what you will find typically with all the FX stuff over the Christmas period, if you've not traded over a Christmas period before, is you will be seeing stuff, but you won't have really gone very far. So the next 2 weeks, you'll usually find we're just kind of sitting around. So it's a case of normally there's no RSI extensions to look at because we've been sitting sideways for ages. So it's a case of the first week or so, you're waiting for the market to play its hand and then sort of get back into the swing of things. So it's always tricky. I hate Christmas. It's almost like you take 2 months off over Christmas period because January is very slow often. Saying that, January last year, 8%. So wasn't too bad last year. But you know, it's, I was holding through December last year, so I had positions open. I hate Christmas. Yeah. I love Christmas. I just hate Christmas from a trading perspective. It's one of those few jobs that because you do it yourself for yourself, when you come back to it, you're like, what was I doing? It's all starting again, isn't it? You're starting again from scratch. And it's one of those things that you do repetitively. When you haven't been doing it for a couple of weeks, you come back and it's like, got to get back into this the swing of it. It's very difficult to pick it back up again. Are we not going to see you again until January? No. No. 2 whole weeks of no streams. Yeah, but go and do something else. There's nothing else. There's nothing to do. If you want to trade, you know, the market is going to be moving. But you've got to take a holiday at some point. And the best time to take a holiday is summer months, where we have got very little banking action and we go very rangy, and Christmas, because we get slipped all over the place and become very rangy. So you take your time off when the banks take the time off. But you can trade it. You know, you can trade. This thing is still going to be moving. It's just you're going to find it's impossible to pick any direction on stuff. You're going to find you're going to get the odd whacking great candle that makes no sense, which will probably just get undone again. Or you're going to find it's going to do something like that, and you'll be sitting there waiting for a signal and you won't get one. You'll have a news event and it will suddenly go 300 ADR, and then it will sit up there for a bit and just grind down. It could do absolutely anything. It's totally, it's always unpredictable, but it's even more unpredictable because you've got slippage. It's just not worth it. Go and do something else. Watch videos. YouTube. Go and further your education. I spend Christmas time doing research. When I'm not doing other stuff, I'll be off doing stuff. As much away from the screen as I can possibly get. Going to be a boring start to the mornings. Yeah. It's only a couple of weeks. You'll have things to do as well. Don't forget, it's Christmas. You have to do stuff. Got to go and buy the food. Got to wrap the presents. There's lots of things to do. Go watch the Bootcamp again. As Vigini has just said, time to revisit the Bootcamp videos. I'm in $5 longs, so I haven't got much of a choice now. Yeah. If you're in $5 longs, quite possible, but wait and see. I think if you've given back more money in the next 2 weeks than any other point of the year, yeah, you will do. It's like today, you know, you can make money out of any kind of movement. If you're going to trade this, go long now, put a stop there, and hope that you can get back up to there. If you can do that once, walk away, because the next time you do it, it won't. And look at this is what you find when you're looking at your charts next week. If you look at the 5-minute charts, you'll see tons of wicks on all instruments. Everything will have whacking great wicks on them because the market's trying to get orders filled, and there's no one wants to fill an order there. Yeah, look at these candles with no wicks on, virtually no wicks. That's because there's liquidity in the market. And if I say sell, someone else will say buy at exactly the same price point. So we just chug along. When there's no volume, no liquidity in the market, and there's volume that comes in to find that liquidity that isn't there, the market has to go and find someone to take the other side of the order. When you've got it filled, it comes all the way back down again. So you're just reaching for orders. And that ends up being wiki market. And a wiki market gives you big movement, but gives you small candlesticks. Or it gives you a whacking great candlestick, which then immediately gets undone, like these ones here. Look. Because it's just the market algorithms trying to get the orders placed. But that says go long. No, go short. No, go long. No, look, go short. Okay, I'm going short. Oh, go short again. Go short. But I haven't gone anywhere. You told me to go short 4 times and I haven't moved. Now go long. All right. It's utterly useless. You can't read price action. And by the time you do get into a position and it suddenly gets into profit, the whacking great black candle will go in, stop you out, and then it'll ping back up to where you were. You'll soon realize it's just not doable. Time off. Time to take time off. Christmas present for myself, thinking to buy Greg Secker's course on how to wild swim. Absolutely. Yeah. If you want to spend some time learning something, obviously do the bootcamp again, but just go off and do Greg Secker's course. whatever it costs you to do Greg Secker's course, it's probably less money than you'll lose trying to trade these markets. You won't learn anything, but yeah. It's coming back up again. Let's see. Yeah. So this is going to end up in a what $600 loss day. So afternoon, Rajiv, market correction in the year to look forward to. Yeah, probably. Well, I mean, it can happen anytime. I finished trading in the zone. I'll use the time to read The Disciplined Trader, Best Loser Wins, and Market Wizard. Yeah. All good books. Trading in the Zone is probably one of the best books out there. Mark Douglas was one of the pioneers of making you realize that it doesn't matter what you do. It's nothing to do with the market. It's to do with you. You're the one that makes the money. The market just goes up and down. Very, very good book, Trading in the Zone. When you're in the zone, you make money. When you're not in the zone, you don't make money. But who puts you in the zone? That. It's very, very, very good book. Market Wizards is also a good book. I've got a nice boatload of uni work to do. Yeah, that'll keep you occupied. Based on the DAX and the FTSE, would shorting the Dow be a reasonable speculation now? I've no idea. Looking at the DAX, yeah, I mean, the FTSE's coming down as well, isn't it? Yeah. But don't forget the pound is rallying, the euro is rallying. This is what's bringing these down. The US dollar is dropping. Yeah. Don't forget this is the inverse euro. The FTSE is the inverse pound. These are the inverse US dollar. Euro's doing that, pound's doing that, dollar's doing that. These are going to go the opposite way to the dollar. Just because those are coming down doesn't mean that these are going to come down. Correlation doesn't work in that way. Might do. I've no idea though. Learn how to put on eye makeup. Yep, that's another thing you can do. Whiten your teeth. Buy a helicopter. Still want to know what that bloke was doing in the pick by the watering hole at the place you stayed. That bloke was doing in the pick by the watering hole. Oh, the wild swimming guy. It was wild swimming. Yeah. Oh, that guy. No, the guy bending over. Yeah. Yes, he was. I'm not quite sure what he was doing. Where the pictures. There's must be a gallery here somewhere, isn't there? No. Explore the facilities. Where's the wild swimming pool? Oh, where's the wild swimming pool? There's the wild swimming pool. Anyway, that's the wild swimming pool there. Very nice. Don't know where the picture is now. Anyway, facilities must be in there somewhere. Oh, good, that bubbly pool. I missed that bit. I'm going to go and lie in a heated chair. If you live in the UK, go and visit South Lodge. Expensive. Is the max exposure still two same currencies at a time on FX? If you're going to use decent size risk, then yeah. I'm still trading everything basically with smaller, much smaller risk. It's about a trader who crashed the market from his parents' bedroom. What is? Oh, Flash Crash by Liam Vaughan. I've not read that one. DAX from 225 plus to 225 minus ADR on day, yeah. Is it? Oh, yes, it is. Look. 225 ADR on the DAX. We knew it was coming, didn't we? Knew it was coming. If I listen to my own advice, what do I always say? Every large move ends with a spike. Off we go. So, depending on what you see as the legs on this, there's either that or that, which we're pulling back on now. Either way, that's your 50% retracement, and your 38 retracement on the entire move is there, and the 50 on that is there. So there's plenty of room to the downside. But yeah, it's certainly starting to move, isn't it? If only it hadn't happened at Christmas, I might be in it. Is Market Wizard also a trading psychology book? Market Wizards is about different traders. If it's the same book, it's not Market Wizard, it's Market Wizards. It's a bit of everything. Read it. Going to pick my car up from a service. Have a good Christmas. All right. Bye, Virginia. I will be back in January. I will see you then. I am still going to be in Telegram. I'm not going anywhere. I still will be in Telegram, so don't worry about that. It's based on a true story. He's based in the UK. Is he? Oh, I didn't know that. Liam Vaughan. Look at that one. I've got myself way overexposed on US dollar CAD. Had a potential exit yesterday, but decided to get greedy. Just look for support. So you've got two levels coming up. This propulsion gap, which you're in right now. And then you've got the monthly low, which is 200 ADR. So we're at 125 ADR. You haven't had a pullback on this move yet. So if we get down to 200 ADR, I would be taking an aggressive drawdown control position there to get that average down. I mean, if we got to 200 ADR today, I would easily consider 100% aggressive drawdown control position. So if you were, I don't know, 15 lots long on it, I would get in with another 15 and get super aggressive on it to get out, because you've got that massive drop. You've got buyers stepping in at monthly lows. This is a three-month low, quarterly low. You're going to get some kind of reaction there if you get there, but it could well just come out of this level. So this propulsion move that we had, which started that leg, we bought it twice. However, the fundamentals obviously shifted a little bit on the US yesterday, so they might run this over. If you get, tomorrow is probably the best day for this. If you get where you are here, obviously we're starting to find some support. So what you could do, you've got an inside bar forming at the moment on the hourly, yeah? Place an aggressive drawdown control position above that candle high, because this is giving you a reversal alert on the lower time frame, isn't it? Yeah. So place an aggressive drawdown control position above that high with a stop under that low. If this reversal holds, you're going to get an aggressive move on. If that reversal moves up and then it doesn't hold, stop out on that. You know where it's going, to the quarterly low. Do the same at the quarterly low. Yeah. This is what aggressive drawdown control is all about, is trying to find areas that have a very, very high probability of a bounce. You're extended below the 25 level on the RSI. You know, that's the sort of move we would expect to get. Just about to see that, can't you? If it's just going to be kind of a flag, you should at least get that. If you can get in with a decent sized position there, that'll do you. That's all you can do. But you've got really good support coming up. Monthly level there. Look at this entire, look at this whole year on the US dollar CAD. We haven't got anywhere this year, have we? This is December last year. This is December this year. Crap. Oh, crap. Difficult year, retrospectively, but good year. Right, I'll leave it there today. I'm just going to watch these. I'm not holding that much hope on this today, so I'm not even going to attempt to get out of them. They're either going to go, I'm going to obviously monitor these until the close, but I'm not going to attempt to try anything clever like jumping out at the pre-market highs or anything stupid. It's either going to move or it's not. If it doesn't move, it doesn't move. There's no point in taking a huge risk on this, so I'll let these play out. Afternoon, Blue Trader from Pontevedra. Sunny at last, thank God. I'm just about to go, so you've come on just as I'm leaving. You'll have to watch the replay. Nothing's happened. I did an aggressive about half an hour ago, so fingers crossed. We need some US strength. Yeah, cool. If it's an aggressive though, and you did it half an hour ago, oh yeah, I suppose you're in. Yeah, perfect. So see, I mean, if you've gone in there, you've got a very tight stop on it, haven't you? So that's not going to cost you too much. That one you would have a little bit more risk on. These are the ones I would look at. Right, I'll take 1.5% on that as a risk because it's a very good probability. The one further down, much better probability. But see how we get on. It's difficult at the moment. This market's trying to unwind for Christmas, so it could go absolutely anywhere. So yeah, so I'll be back at 3rd of January. We'll obviously have a recap of what's going on. Plan for next year is very much the same. Obviously, position trading. I'm going to be running my position trading account as normal. I'm going to be running the index hedging as normal, and I'm also I still haven't finished it, but I'm in the middle of a hedging strategy for FX using a portfolio hedging approach, which I want to start running live because all the back tests are looking really, really good. However, I haven't finished the EA, and I don't want to. It's not something I want to do manually because it's complex maths and stuff. I need it done automated, and then I will watch what's going on with it. So I'm hoping to run an account on that next year as well. 200% on pound New Zealand. Don't get in front of these things today. They're crazy. Complete V-shaped recovery on the entire move from the last 24 hours. So yeah, but I need to get that sorted this over the Christmas period. So I will see how I get on. But I will start doing that next year as well. So yeah, it's going to be much the same format next year. I want to do some kind of educational thing, but I'm struggling to find any time to put anything together with anything. So it's kind of probably going to be very much similar to what it is at the moment. Anyway, we will see. So yeah, I'll be back January 3rd. I'll be in Telegram though. So anything you need, let me know. I'll be in Telegram. Have a good Christmas. Hopefully you'll get all the presents you want. Wild swimming vouchers, eye makeup, teeth whitening kits, the usual, helicopters, Rolls Royces, mansions. Sorry, Greg, you're not in here, are you? Anyway, have a good Christmas. I will be back in January, but I will speak to you all in Telegram at some point. So have a good one.